All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday. So, ladies and gentlemen, I just wanted to do a little quick piece here on the markets, what's happening. Basically, I don't normally do on Fridays, but today I think it's a special day. Look, I'll get into all that in a little bit. Because again, tariffs are back on the table. This is what I kept on saying in my previous webinars. So if you were watching those, look, I mean, but look, I'll talk about all that in a bit. Before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll let you read the rest. So yeah, like I said, today is it's getting a little bit of a different spin, if I'm not mistaken. Well, and I am not mistaken, to be honest. I mean, look, the market is turning south, and yes, and everything is because one person tweets or posts, didn't tweet, but he posted, and basically, yeah, it kind of again, we're back to this point where one person kind of controls the whole global market. Also, just before we jump into everything, let's quickly read through, or actually not read through, mention our. Oh, you can see my brain is really jumping right now because again, I'm really so eager to look at to look into the market right now to talk about this because it is just crazy. So yeah, like I said, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And now, ladies and gentlemen, looking at this DAX, I wanted to first of all start with this one because again, it is getting affected hard. Look, DAX was doing good, honestly. It was initially doing good. We were going for all-time highs. Today, we almost hit a new all-time high, but then boom, quickly everything changed. The tone changed. One person posts a message saying that we probably they're gonna do 50% tariffs, on EU if they're not gonna, cooperate. Now EU is preparing more, reciprocal kind of, tariffs in response. It is getting a bit messy again, once again. So look, what I want to say here is, if you thought that you're going to have like an easy Friday, well, think again. Basically, we're back to tariff talks. And I talked about this thing in my recent videos, in my recent webinars, where basically I said that, look, yes, we had some negotiations done with China. There were some negotiations done with China. That's great. But in general, is it actually good? Is it still, I mean, does the market still, can be happy about this? Well, no, because again, the market confidence has been shaken, and now it's going to be a little bit difficult to restore it. Okay, there will be some ups and downs, of course, but in general, the market now doesn't really believe in good times anymore. We kind of believe that they will be happens at some point, but probably not now. So. And that's what I'm saying. And what I'm looking at here, I'm looking at DAX, and from the technical perspective, we are falling back below this 23,475 territory. I talked about this in my previous webinars. Also, I said that, look, keep your eyes on that 23,912 zone right there. Boom, beautiful technical setup, played out fantastically. We cleared also the highest point of March of 2025, this year, of course. And now everything's kind of pointing more towards the downside. Again, there is, like I said, there are threats, there are fears, economic threats and economic fears, and this is what's not helping the stock market. Look, don't get me wrong, it is still fixable, but I think that for now, I think in a couple, maybe going into next week, we could see a little bit more action to the downside, or unless, if I look at just the DAX, purely the DAX, then maybe, just maybe, we could be forming something of a head and shoulders pattern. Look, I'll drag this line here, and I'll steal it from there, and I'll put it right here. I'll mark the 23,000 kind of 390 zone here. It's roughly, it's never the exact level, it's always the area around that level, because look, maybe this area is going to provide good support. And let me just grab this one right here. Maybe, just maybe, we'll get something like this. And if that's the case, then hey, of course, a beautiful reversal could be building up. So again, this is just an idea. For now, we're carefully monitoring this 23,000 kind of 390, 400 zone on the DAX. If it continues to provide support, okay, going into next week, because again, next week is the last week in the month, and so far DAX was in positive territory. So maybe we'll stay somewhere positive, because again, maybe if this rebounds, pushes back up here, maybe we could test that 23,912 zone. But then again, it's becoming a little bit difficult. It's really becoming difficult, because we could be jumping in. We're going to be jumping into the last month, June, the last month where this 90-day period. If you remember when we had this Liberation Day, when tariffs were imposed on everybody and all countries, and then kind of got removed. Said everybody said that okay, we're going to pause that for 90 days. So we're going into that last month in general of the 90 days, this kind of pause. So that's what I'm saying. So maybe June could be a little bit subdued here as well on the DAX, unless everything gets, unless we get a headline saying that, boom, we're not going to have like any more tariffs and everything is going to be rosy. Then yes, then we ignore this formation, and we could see a push, further north. However, let's not rush into things. Again, also, don't get me wrong, this formation is just an idea. It's not also something that is for sure, because again, we are trying to find some sort of logic here. And for me right now, given that we're getting a hold up near this 23,000 kind of 400 zone, is kind of giving me this indication. Maybe, just maybe, we could see this as a possible head and shoulders pattern. But let's wait. Let's not rush into things. Let's better jump into the U.S. indices. You can see that yes, we are drifting lower. Dow Jones Industrial Average here. I'm looking at the cash index here, and we're just a few minutes away from opening, and just wanted to kind of show you this. So let's put it this way: if we continue to trade somewhere above this upside line, I'm still keeping an eye on the upside scenario. However, if we do drop and stay below this upside line, and we already dropped, but if we stay below this upside line, I'm leaning towards lower levels. Also, we can have a look at the Fibonacci retracement here. You can see that we've tested that 23.6, so that's why we are at a very interesting and critical spot. If we do remain below this territory, my next target, and this is where I need to kind of draw the arrow shorter, my next target is the 40,435.30 zone-ish, approximately around there, basically near the 38.2 here on the Fibonacci retracement. And then we'll go from there. So keep that in mind. Next week we have the PCEs, the last trading day of May. We get the Fed's favorite inflation metric, the PCE, and well, again, that one is expected right now to drift a little bit to the downside. So basically, prepare for some pressure. Fed, prepare for some pressure from the White House, because they will say that here, you see, inflation is dropping, so drop your rates. I think that the Fed is kind of trying to take a correct approach and not rush into that, because again, all these tariffs, all these, all this jumpiness is not really, can eventually kind of, increase inflation later, because again, if we're seeing shortages, or we are seeing, let's say, we could be seeing shortages in trade, and this means that if demand remains somewhat the same, then look, I mean, simple supply and demand, right? You lower down supply, you have the same demand. Well, guess what? The price is going to go up again, and especially given that right now we're seeing that. The all-beloved iPhone could be built in the U.S. of course, because that's the pressure. That's what they're putting, on Tim Cook. And if that's the case, then well, I mean, some say that the beloved phone could, triple in price. Well, again, we'll see how that goes, of course, but in general, it's not really working out well for this stock, because as you can see, pre-market, we are already below the yesterday's close, well below. So I mean, in a way, this could continue drifting lower. The S&P 500, yes, continues to move in the same direction. I was kind of leaning towards the downside on this one. I said that if we do this week in my morning webinars, I said that if we do break this upside line, I'm leaning towards the downside. But again, I'm going to keep an eye on these EMAs, maybe even this 5,786 zone. Maybe it could provide a bit of support. Maybe we could rebound. But okay, and now we need to keep an eye on the EMAs. If those provide support, that's great. We could see, further we could see like a further move up to the or sorry, I shouldn't say the word further, actually. On the contrary, I should say actually a nice rebound. The further part would be if we see a break below these EMAs, and then yes, we could see a further decline. Again, the same story. I would like to draw the Fibonacci retracement here, and you can see that we are approaching this 23.6, which coincides nicely with the EMAs here, or should I say it's near the EMAs, and this could be, like I said, this could be a nice good area for support. But if that gets cleared, ladies and gentlemen, 38.2, here we come. US Nasdaq, Nasdaq 100, yes, the same story, drifting nicely to the downside. Looking at this picture here, yes, again, the 23.6 looks quite attractive, and I think that this could be the case for now. I mean, this is what I'm going to aim for right now, and then I'll see if maybe we can rebound. If we can rebound, that's wonderful, but if we can clear this 23.6 together with the EMAs, well, I will consider a move lower towards that 38.2. So, ladies and gentlemen, continue monitoring the headlines. If you thought that you're going to have like a very positive Friday, well, think again. The market's going to open in a few minutes, so hey, let's see what kind of madness we're going to get there. But for now, just as always, I keep on saying, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. So yeah, I'll see you on Monday. Yes, I know that the U.S. market will be closed. However, we'll still see how other markets are reacting, and basically we'll see how maybe the forex market is also reacting to all this. So look, join me on Monday, as always, 7 o'clock GMT time for my Markets Talk webinar, the live session, and yeah, we'll go from there. Thank you very much. Have a beautiful weekend. Stay safe. Have your stop losses in place, as I keep on saying. Yep, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.